Welcome to the deep dive. Today, we're doing a really focused exploration into DataDog, that's ticker DDOG, a big name now in cloud security.
A huge name.
Yeah, and we've gathered some really interesting stuff for you. We're looking at technical charts, including something called rhythm analysis. It's financial health, market news, even what people are saying out there in the community.
Right, the unfiltered stuff.
Exactly. So the mission is to really sift through all that and figure out, what's driving Datadog now and maybe what's next.
Okay.
And you've probably heard the news, Datadog just got added to the S&P 500.
Big deal.
Huge deal. Stock jumped, 15% right after? It's hovering around $140 now.
Yep, around there.
So here's the question we really want to get into.
Hmm.
Is this S&P thing just about more people trading it, more liquidity, or is there something, deeper going on? Does it signal more about its actual value?
That's the perfect place to start, I think. Because what our sources are suggesting is that, yes, the S&P inclusion, it's not just about liquidity. It's seen as real validation.
Validation. Okay.
Yeah, validation of the market's belief in Datadog's fundamental strength. And, well, what's driving that belief? It really comes down to performance.
Yeah, the numbers.
Exactly. Look at Q1. Revenue was up 25% year over year. Solid. And their EPS, the earnings per share, that blew past expectations significantly.
Okay, nice beat.
And crucially, they didn't just report good past numbers. They actually raised their forecasts for Q2 and for the full year.
Ah, so they see the momentum continuing.
Precisely. And this isn't just numbers in a vacuum. Our sources connect this directly to companies really leaning into AI strategies.
Makes sense. AI means more data, more complexity.
Exactly. A massive surge in data, new security challenges, and Datadog's platform, especially since AI-related cloud security is now, 35% of the revenue?
Wow, 35%.
Yeah, it's uniquely positioned to handle that. They offer the kind of monitoring and security these companies need as AI scales up. Oh, and they've got healthy cash flow, too. Always a good sign.
Okay, so the financial engine sounds like it's really firing on all cylinders, strong demand signals there.
Definitely.
But, for a lot of people watching the stock, the price chart tells its own story, or at least it gives a different angle.
Sure, the technical picture.
Yeah. Our sources get pretty deep into the technicals, suggesting some actual price strategies, like short-term support around $140.
Where it is now, basically.
Right. And then longer term, maybe $129, or even down to $123 as potential support. And upside targets, they're talking mid-150, maybe even hitting $180.
Quite a range.
It is. And the analysis uses these interesting terms like rhythm analysis and Elliott wave theory to get to those numbers. Can you maybe unpack those a bit? What do they actually mean for someone not, deep in the chart reading world?
Absolutely. Let's try. So rhythm analysis.
Yeah.
Think of it like listening to the stock's heartbeat. Sometimes the price action is fast and choppy. Then maybe it slows down, finds a steadier beat. This analysis tries to spot those changes in volatility, like how prices might trade in a narrow range and then suddenly expand outwards. And it uses this along with other things like RSI, that's the relative strength index.
Right. Overbought, oversold indicator.
Yeah, it uses these together to try and predict, potential turning points for the trend. Elliott wave theory. Well, that's a more established idea.
Heard of that one?
Yeah, it's based on this concept that market prices tend to move in these sort of predictable repeating wave patterns. It's driven by collective investor psychology, the thinking goes. Markets aren't just random noise.
So like ups and downs follow a pattern?
Sort of, yeah.
Yeah.
A natural progression. And then they mentioned TR resolution. That's, think of it like clearing out old inventory.
Okay.
If lots of people bought Datadog way higher, say near the old peaks, they might be feeling kind of trapped, just waiting to sell if it bounces back a bit.
Right. Get out even or with a smaller loss.
Exactly. So TR resolution is when maybe the price dips a little and those trapped sellers finally give up and sell. That selling pressure gets absorbed, it gets resolved. Fewer people are left waiting to sell, which, can make it easier for the stock to then move higher.
Ah, okay. Clears the decks, sort of.
Kind of, yeah. And those specific price levels you mentioned, the $140, $180, etc., they're often not just random numbers. They might be key Fibonacci levels derived from these wave patterns, or they could be previous price zones where a lot of trading happened, suggesting like a battleground. Rhythm analysis helps identify those zones too.
That's a helpful breakdown. So it's a way to gauge the underlying market pulse, maybe?
That's a good way to put it, yeah.
Okay. So beyond the charts and the strong financials, our sources also tapped into what real users are saying, like on Reddit, Twitter.
The ground truth.
Yeah. And it's interesting because while Datadog mentions are definitely up, it's not all sunshine and roses, is it? What's the chatter actually like?
No, it's definitely a mixed bag, and that's an important point. You get the full picture, right?
Yeah.
So, yeah, lots of positive comments, people praising the tech, the security features, but
What?
our sources definitely picked up on some recurring complaints too. For instance, some Reddit threads talk pretty openly about Datadog lag, especially during busy periods.
Performance issues.
Yeah. And cost is another big one that comes up often.
Yeah.
There was even one tweet, kind of joking, but maybe not entirely, saying something like, "My Datadog invoice is bigger than my mortgage."
Ouch. Yeah, enterprise software can get pricey.
It really can.
Yeah.
So look, you have institutional money flowing in. It's a leader in this hot AI security space, but it's not perfect. There are operational hurdles, user frustrations.
Context to have.
Absolutely.
Yeah.
And even with strong fundamentals and market position, no stock lives in a bubble. Our sources were also pretty clear about highlighting some broader market risks.
Right, the external stuff. Always got to factor that in. What are those wider currents Datadog needs to navigate according to the analysis?
Okay, so zooming out, the analysis points to a few key things. First, just the general high volatility you often see with tech stocks.
Yeah.
Even strong ones can swing wildly.
Yeah, tech can be a roller coaster.
Definitely. Then there are the bigger macro worries, concerns about a global economic slowdown potentially hitting company spending.
Budgets tightening.
Could happen. Interest rates are still kind of a persistent issue, right?
Yeah.
Higher rates generally make growth stocks a bit less appealing compared to safer options.
True.
And finally, the potential for short sellers to become more active. If more people bet against the stock, that can obviously put downward pressure on the price.
So macro headwinds, basically?
Yeah, exactly. Things outside of Datadog's direct control, the things you absolutely have to keep an eye on, they could definitely dampen even a really strong story.
Okay. So putting this all together, what's the big picture takeaway from this deep dive? It feels like Datadog is kind of sailing on two different currents.
How do you mean?
Well, on one hand, you've got these powerful growth drivers, right? AI, cloud security, the S&P 500 inclusion, giving it a nice tailwind. Looks pretty smooth.
Right, the bullish case.
But then at the same time, it's got to deal with the choppiness of the overall market, that tech stock volatility, plus those user friction points we talked about.
The headwinds and internal challenges, yeah.
So we've seen how the company has own strength, these big market events like the S&P inclusion, and then these quite intricate technical signals all kind of weave together into a complex picture.
That sums it up really well. And so maybe the final thing to leave you, the listener, thinking about is this.
Okay.
When you look at everything we've discussed, you essentially have two different narratives, right? On one side, you've got what seems like a pretty clear growth story. It's fueled by AI demand. The financials look undeniably strong.
The fundamental case.
Right. But then on the other side, you have these technical analyses, rhythm analysis, Elliott wave, which offer clues and price targets, but they do require some interpretation. They're not guarantees.
Sure, technicals are about probability.
Exactly. So the question to mull over is this. When you factor in those market risks we just talked about, the tech volatility, the economic worries, interest rates, potential short selling, which side of the scale do you put more weight on? Do you lean more towards that compelling growth narrative? Or do the signals from the technical charts and those broader market headwinds carry more weight for you right now?
Interesting dilemma.
It is. And I think wrestling with that question, figuring out where you land on that balance, that's probably the best way to really internalize and make sense of all this information we've covered today.
DataDog DDOG. Consolidation around $140 before renewed rally. What's the next upside target? Hello, this is TopTrader JinLog. You can find the full analysis report on my blog. This video provides a talk show style commentary followed by a rhythm analysis report. Please check the full report on my blog. Summary: Datadog is consolidating around the $140 level in both short-term and swing timeframes, suggesting the potential for a medium-term trend shift once this base holds. The recent inclusion in the S&P 500 triggered a 15% price surge. Q1 revenue grew 25% year-over-year, and Q2 guidance implies 22 to 23% growth, underscoring strong AI-driven cloud security demand. Key entry points are $140 short, $129 swing, and $123 medium, with target ranges of $152 minus $165 and $169 to $184. Medium-term targeting awaits fresh rhythm confirmation. Investment opinion short-term target, $152 minus $165 zone. Recommend buying on confirmation of support near $140. Swing term target. Upon clearing $129, look for upside to $169 minus $184. Managing volatility carefully. Medium-term view, monitor support at $123. Rhythm not yet fully measured, so proceed cautiously. Chart description. Here is the chart of DataDog DDOG NAS you requested. The circled areas mark short-term consolidation followed by uptrend continuation. Higher probability entry zones coincide with swing and medium-term trend lines. Always verify trend and wave structure on each chart before taking action. Rhythm analysis, short-term rhythm. In the expansion formation phase, showing bandwidth contraction and initial compression stage. Swing-term rhythm, also in expansion formation, attempting to recover toward the band center. Medium-term rhythm, entering weakening adjustment divergence phase with a shift from expansion back toward contraction. Recommendation. Monitor RSI and MACD histogram shifts alongside these phases. Financial flow, Q1 2025 revenue, $761.6 million, plus 25% YoY operating cash flow, $272 million. Free cash flow, $244 million, EPS, 46 cents versus 43 cents consensus, Q2 2025 guidance, $787 to $791 M revenue, plus 2223% YoY, non-GAAP operating income $148 minus 152 M, approximately equals 19% margin. Full year outlook, raised to $3.22 minus 3.24 B from prior $3.18 minus 3.20 B, driven by robust AI security demand. News, risks, events S&P 500 inclusion early July drove a 15% price jump on expectations of increased liquidity. AI-driven cloud security demand. Positive Reuters coverage highlights strength in this segment. Analyst upgrades. Bank of America and others raise target prices, boosting sentiment. Risks. Technology sector volatility, macroeconomic headwinds, and the potential for rising short interest. Strategy scenarios, short-term buy strategy entry zone. Around $140 consolidation area conditions. Trap relief is greater than or equal to 2/3 steps plus expansion formation rhythm plus volume surge plus S&P 500 inclusion tailwind swing term buy strategy entry zone. Around $129 conditions. Trap relief is greater than or equal to 2/3 plus expansion formation rhythm plus confirmation of market regime. High versus low volatility. Medium term buy strategy entry zone. Around $123 conditions. Trap relief is greater than or equal to 2/3 plus shift from weakening to adjustment in rhythm plus consideration of longer term macro context. Elliott wave analysis short term. Wave 3 progression. Entry at $140 with trap 2/3 plus expansion formation rhythm. Swing term. Wave 4 correction. Entry at $129 with trap 2/3 plus expansion formation rhythm. Medium term. Wave 1 reinitiation. Entry at $123 with trap 2/3 plus weakening adjustment rhythm. Community flow. Reddit r DevOps. Mentions plus 15% mom, 3,200 right pointing arrow 3,680. Top terms, Datadog _agent. Monitoring, alert, Twitter, hashtag Datadog. Tweets up 25%, 1,200 right pointing arrow 1,500. Sentiment, positive 68%, negative 17%, neutral 15%. Key influencers at DataDog, at TopStackX, Stack Overflow. Questions up 27%, 150 right pointing arrow 190. Top tags DD Trace, Datadog API. Sentiment keywords positive. Performance, visibility, security, negative. Latency, cost, overhead. Outlook and risk summary. If $140 support holds, further short-term gains are likely, but tech sector volatility warrants risk controls. Medium-term outlook remains constructive given AI security tailwinds, though global macro uncertainty and rising short interest pose potential headwinds. Deep dive report institutional flows net inflow of 1.2 M shares over the past 4 weeks reinforcing the uptrend. AI business impact. AI security accounted for 35% of revenue, serving as a key growth driver. Order book pressure. MACD histogram turned positive. RSI approaching overbought territory. Monitor for momentum shifts. Brand disclaimer. This report is produced using the VPAR rhythm analysis methodology, combining chart rhythm flows with order book patterns to identify optimal trading points. All investment decisions are at the investor's own risk.